Disclaimer. This podcast is for FCA-authorised financial advisors only and is not for retail clients. The views expressed in this content and all other content on this channel are those of the individual speaking and do not constitute financial advice or a recommendation to invest in any product, asset or strategy, including those discussed in sponsored segments. This content is for educational purposes only. Always do your own research and consider all relevant risks before making any investment decisions.
We're struggling, and so things like government debt and bonds, I think the outlook is very bleak. I was worried about the printing of money and inflation, and how is the US or the UK ever going to pay back their debt? I didn't know that, but until 1971 we were effectively all on the gold standard. The advisors and their support staff need to understand Bitcoin. We're shorting Bitcoin at the moment, which does not make me feel comfortable. Bitcoin is like a massive co-op. There aren't any shareholders, that we all kind of help each other out. Bitcoin is here to stay for the better good of the majority of the people on this planet. The BlackRock ETF is the best selling and the best performing ETF ever. And so it will come to the UK. We're just 3 or 4 years behind. So I'm convinced, I'm very confident that in the long run, Bitcoin is going to do very well. I want my clients to have the same investment experience as me. If I'm investing in Bitcoin, the very least that I need to do is to share that with them, because otherwise I'm not investing the same way as they are, and that's unfair, and I think that's unethical. Is Bitcoin a store of value, or is it a mechanism of payment? Is it a currency? Well, it's both.
Hi Mark, welcome to the Bitcoin IFA podcast.
Good morning, Dan. Again, we've spoken a few times recently. Good to see you again.
Indeed. We have indeed. How are you doing today?
Good. Yeah, all good. Thank you. Yeah.
Good. Glad to hear it. Mark, you've got a really interesting financial advice journey. Talk us through that.
I think it is probably different to most. So in 1988, I was working as a registrar, anaesthetic registrar at St Mary's Hospital in London, and reasonably happy in myself, but as all doctors in their junior doctor stages, you get a bit cheesed off. You're doing 100 and something hours a week. You're earning less per hour than the lady cleaning the ward or the man cleaning the ward. And my squash doubles partner at the time, who is also my financial advisor, said, rather than moan about it, why don't you come across and consider working with us and setting up a medical finance unit? Now that's something I hadn't considered, so that did come from left field. But long story short, I was a good client. I thought it was a good idea to save money and to do an extra pension contribution. So I had a savings plan and a freestanding ABC. I had some insurance because I thought that was a good idea as well. So as far as the principle was concerned, I thought that every doctor should do what I was doing. And then taking that forward, John went through the kind of the finances of it. And so I was living in a single room in Paddington and no chance of buying property at all in that area for the foreseeable future. In medicine, it takes a long time to get anywhere. You do well financially, and it is an enjoyable job, but it would have taken me 10 to 12 years to become a consultant from where I was at that stage. So I joined MI Group as a trainee financial consultant, and within 3 days I was not even a trainee, I was a financial consultant. I was then called a consultant, and I was able, because in those days it wasn't the advice per se that was regulated. This was 1988. It was really the product that was regulated. So they took the view at that stage that if you sell someone income protection, and the check was it was for the right amounts, there was compliance, but it was pretty basic. Or if you sold someone a savings plan, or you sold someone a pension, it was a good idea. They didn't quibble or which pension was it the very cheapest, or was it had the very best funds in it. It was just if the product was suitable for the client, then it was a suitable sale. So I joined a company called the MI Group that was it was a university of life, as well as a training college for anyone that ever wanted to be in a sales environment. It was a unique place. It taught me a lot, and it lived up to my expectations in terms of the opportunity it gave me. So John said that if you work hard and you do, you learn your craft, you'll get through you will progress your career very quickly. And I know it's money doesn't buy you happiness, but it does buy you a bit of choice. And within 18 months, I was earning as much in a month as I was earning as a year as a doctor. And not even I wasn't a newly qualified doctor. I was a registrar. I was running the ITU unit at St Mary's Hospital at weekends and doing pretty big cases by myself. So that was a major change in my life to be able to achieve that. As I said at the beginning, I wasn't particularly unhappy as a doctor. So I still did medicine. I still did medicine 1 day a week. Both, I felt that I had to give something back. The society and the NHS had trained me for those. So I went back mainly on a pro bono basis, that I would do operating lists as an anaesthetist in hospitals, and I wouldn't charge the hospital for it. But it's a great way of getting clients, because they all say, "What are you doing? Well, I hear you're not in medicine anymore." And so it was a bit of a snowball effect, and quite a few other doctors joined me in the medical finance unit at MI Group. So the MI Group, as I said, was a pretty unique type of operation. It was a big operation. At the peak, it had over 1,400 advisors as part of it. And the bit that really captured my imagination, apart from the people there and the ethos that they had, the work ethos. We worked as hard at that company as I did as a doctor. People worked very, very hard there. But the chaps that ran it were both brilliant people, flawed people, but the idea that they proposed, that they put to the staff, was that you are shareholders in the company. So up until that point, in fact, up until about 20 years ago, financial advisory firms were sold and bought on the value of the people within it. So I remember Alan Smith's interview he had with you, where he took over someone's client base. Well, you take over someone's client base, it's a list of people with policies. So it's not like today where you'd buy and sell a practice based on funds under management. So I was sold 20 years ago for £30,000. That was my value in 2004. Perhaps we'll come on to that. But at the time, the MI Group, their idea was that with the help of Allianz, so a big financial player, that we would reward the advisors within our group by buying an insurance company. So they bought Merchant Investors, and increase the embedded value of the life insurance company and get the value out that way. So you'd have shares in the group, and that will be your exit route long term. And so every year we got our shares, and you do the numbers and you think, oh, I've got 30, 40, 50, 60. The hope was there, that the hard work that you were putting in, you saw light at the end of the tunnel, that rather than just having to chase commission every year and start every January with zero and build up your income again, you would have something to fall back on. So that didn't work in the end, because it was a very good business idea, but run by a sales person, and it kind of blew up when the property crisis hit, and Allianz took the insurance company back. They had the big bucks. But we morphed into City Financial, and again, that was a much better run company. And again, we had a small amount of shares, and that was quite. We did get some money when that was sold 10 years later. But that the idea of owning shares in the company you work at has really stayed with me. And so when we set up Medical Family Finance in 2013, the premise was that everyone that worked there would be able to have shares if they wanted them. And so now, out of our 40 odd members of staff, well over 30 have got shares within the company. It's pretty easy these days to value an IFA. You can either, if you've got more than $500 million, you can do 4% of AUM, or you can do a multiple of recurring income, 3 to 4 times recurring income gives you a value. So everyone in the company, they don't need me to tell me what their shares are worth. They can work it out for themselves. And we're a growing company. We're putting on 50, 60 million a year. That increases the value of the company, increases the value of their shares. So that is really, really important to me. I firmly believe that rather than me being the single shareholder in the company and just getting money out for myself at the end, if we share that around and everyone's part of it, the cake will be a lot better, a lot bigger at the end, and we'll all have more money. That's one of my firm convictions in, I suppose that's more life, isn't it? Life and business rather than financial services, because that will apply everywhere. So roll forward to today. I'm the non-selling principal of Medical Family Finance, and I'm also the chairman of an accountancy practice called Sanderson Lang. And that came about because one of the very best ways to get clients is for accountants to refer business to you. The job is done. Andrew Lang, who ran that practice for many years, and he had a practice around the corner from mine in London, used to send people around, and the clients would knock on the door and say, Andrew's told me that I need to sort out my pensions. Here are the papers, can you please do it for me? So it didn't take many sales skills to take on a new client. And doctors generally have got they're not super wealthy, but they're generally well off, and so they were very good clients. Andrew wasn't the healthiest of people, and had a few heart troubles, and he said to me, look, if I drop down dead, will you look after my company for me, and more importantly the staff? So I became a director of that, and eventually when he wanted to retire, I bought it from him. And so that still stays where we are today, that the two companies work very closely together. We refer at MFF clients to Sanderson Lang, and Sanderson Lang excuse me, refer clients to us. It's a very no money is exchanged. It's for the mutual benefit of the clients, and eventually the two partners of Sanderson Lang will buy that from me, fully buy it from me. They bought some of it already, but I hope the two companies will continue to work together for the foreseeable future for mutual benefit. So,
wow, what a journey! There's a few things there that I'd like to pick up on. So, one of the themes that I'm picking out from this is equity and equitable management. My background is actually in ad tech and tech startups, and in those, everyone is always given equity because it's especially in the startup world, you want everyone to be fully engaged, fully involved, but also seeing that light at the end of the tunnel for IPO/buyout, whatever that looks like. It's also a way of underpaying people, but and that's very rare, right? In the financial advice world, when I've spoken to firm owners and stuff, and I've asked, have you ever given out equity? And it's generally a no. So I'm picking up on a very equitable theme here that you'd like to keep people involved. Do you think that's influenced by your medical background?
That's a very good question. I've never thought of that before. Possibly, yes, because if you looked at where the NHS was when I left in the 80s, it was leading in the world of medicine with people doing huge amounts over and above the work that they were paid for. And we truly were the country that everyone else aspired to. We were doing heart transplants, we were leading research. The NHS ran really, really well. I know we've got hundreds of managers these days. We didn't in 1988 when I left St Mary's Hospital. The budget of the hospital was run by our lead anaesthetist, who is called the Fat Controller, which it sounds very rude. We all loved her. She was a very benevolent lady that looked after the people in her team, but she ran the department very carefully, and she was passionate about it. So much so, there was two types of anaesthetic. There was halothane, which is the old volatile anaesthetic that you breathe when you get put to sleep, and very, very cheap, very safe. But it takes forever to wake up from that. And there was a new one called isoflurane, which was 10 times the price, but you'd wake up just like that. So if you had 6 or 7 people on your list, you wanted to use isoflurane because it meant you could go off and play squash in the evening with John or something like that. She wouldn't let us because of the cost. But so what we used to do is we used to swap the halothane for the isoflurane on our anaesthetics machine. But she would come along and check. And when she came into the department, the message went down the department that the fat controllers arrived. We used to swap it across. She'd come in, how's it going, Mark? Is everything all right? Yeah. Oh, I see you've got halothane. That's good. Yeah. Save money for the department. Thank you. She'd go and we'd put it back again. but it worked. It worked. People were very professional. They did over and above, as I said. And there was a real camaraderie. Now, if you're doing 100 and something hours a week, you're like in the trenches and you have to help each other out. You can't do it by yourself. And as a doctor, you can't treat everything. So you need to work well with your colleagues and share the burden for it to work. Teamwork was the most important thing. There, we always, they used to be called firms. So groups of doctors work together, look after patients. And I remember distinctly that the surgeon I worked for said that we are the best firm in the hospital, and we had to live up to that. So, but the other firm wanted to be the best firm in the hospital as well. So there was a competition to look after the patients in the very best way that you could. But it had to be collaborative. Yes. So coming around to answer your question, I think that working together as a team is much more important to me than just doing it for myself.
Hi team, a quick interlude to ask, what if you could offer your clients Bitcoin exposure on a regulated investment platform? Because that's what my friends at P1 have done. They've created a discretionary model portfolio invested into companies with significant operations in digital assets, available within general investment accounts, ISAs, and pensions, and managed by award-winning investment professionals. With P1's digital assets portfolio, you can access a professionally managed portfolio of listed companies powering the digital asset economy, such as miners, blockchain infrastructure, payment services, and listed companies with Bitcoin treasury strategies. It's Bitcoin and digital asset exposure built for regulated advisors. It's diversified, actively managed, and with full transparency. P1 created the portfolio for advisors who see the long-term potential of Bitcoin and the digital asset economy, and who are starting to look at how best to facilitate exposure for their clients. It is packaged in a way that fits into an advisor's day-to-day investment advice process. So if you're an advisor who wants to offer digital asset exposure without the operational headaches, visit the URL in the show notes or use the QR code on screen. P1. Bridging traditional finance and digital assets, only available on the P1 platform and via regulated financial advisors, and the value of investments can fall as well as rise, and you may get back less than you originally invested. Now back to the show. Teamwork makes the dream work. And actually, that's a nice segue into the decentralized nature of Bitcoin, right? So this is a Bitcoin podcast. Everyone's against Bitcoin until they're for it. What's your Bitcoin journey?
Well, total ignorance until until October last year. So obviously I heard about it and I dismissed it because I didn't need to buy any drugs on the dark web and I didn't need to buy any guns on the dark web. So I didn't need to have any Bitcoin. So that's simple in my mind. I went to a wedding in Argentina, my nephew's wedding, and I saw from the map that John, the friend I talked to you about, my squash doubles partner, who's no longer in the business, but lived in Brazil, and it was, as a straight light went, it was on the way. It wasn't. It didn't turn out to be quite such an easy journey as I thought, but I'll go and see John, I thought, on the way to the wedding. It was lovely to see him. It really was. He mentioned in the couple of phone calls about Bitcoin, which I obviously ignored. But when I was in his house and doing kite surfing with him and having dinner with him, obviously I couldn't ignore it. I had to engage in this conversation. And they were, okay, John, yeah, you tell me about this then. John's a person I respect. He's very bright. And so I listened to him. And no, okay, well, that's interesting. I didn't know that, but until 1971, we were effectively all on the gold standard. And if I wanted to cash in my pounds or dollars, someone would give me a bit of gold back. And so, really, since my early teens, then we had this different type of currency. So it was new. No, it wasn't. A hard currency, if you like. It was just a promise to pay you type currency, and that was really quite a shock to me. The realization that kind of sunk through, because I had in the back of my mind at the same time that I was worried about the printing of money and inflation. And how is the US or the UK ever going to pay back their debt? And it's getting bigger the whole time. This doesn't seem to quite make sense. So that definitely struck a chord. But I certainly didn't think that Bitcoin would be the solution, because Bitcoin was a cryptocurrency and it was the same as all the other crypto, which I couldn't name, but there are 17,000 cryptocurrencies I know. Perhaps not all trading, but there are an awful lot of them. And I hadn't appreciated the difference that the other 17,000 have got boards of directors and shareholders and marketing departments and
lobbying teams.
Lobbying teams, yes. Whereas Bitcoin is like a massive co-op. There aren't any shareholders, that we all kind of help each other out. And I suppose when I was being trained to set up my account with using the Bitcoin way, they said you should have your own node and be part of the community and contribute through the node to the security of all the other people using it, and it gives you a bit of protection for yourself as well. That again seemed to be a no-brainer, and it wasn't, with their guidance, it wasn't a difficult process, and it's something that I check once a month, and it seems to work. Even with power cuts now, it seems to fire back up again, and they check it for me and we do the updates. It's not, well, as you know, Dan, I'm not tech savvy particularly, and I'm not particularly interested either in that side of it. But no, I'm quite pleased with myself that I've been running a node for the past 6 months, and I might even mine one day. Who knows? We'll getting onto that.
Well, there's a few things I want to touch on there. So firstly, yes, John Grosh, affectionately known as Grosh, friend of the show, partner now of the Bitcoin IFA. So big shout out to him. He obviously put us in contact. And you touched on, coming off the gold standard in 1971. And it's often shocking to me when I speak to advisors. And often they don't even know that happened.
Oh, I didn't. No.
Completely unable to discuss what that meant, why we've had exploding debt since then, what the primary, secondary and tertiary effects of coming off that. And this is all actually explained in really good detail in Joe Bryan's video, What's the Problem? It's always a link to that in our show notes. Shout out to that. Please pause now, go and watch that, come back and continue listening. It is, I would say, essential viewing. It's 30 minutes long. It's essential viewing for all financial advisors and arguably everyone. But in that, he runs through the primary, secondary, tertiary effects of coming off a hard money standard and moving on to fiat currency, which is essentially backed by nothing other than, well, a government promise to pay. And then, in the real hardliner Bitcoin community, they would say it's essentially backed by violence, because you either pay your taxes in this fiat currency or you go to jail. So yeah, and it's always shocking to me about that sort of lack of knowledge. But also coming onto the node, you're approaching a year, so you're less than a year into your Bitcoin journey, and you're running a node. I'm half a decade in. I wouldn't know how to run a node. I know what nodes are functionally. They are essentially, you are contributing. So I'm picking up on these themes of contributing equitable interactions with people. And that's essentially what running a node is, because it's adding to the network of the decentralized network, right? So it's compounding that decentralized nature, which is that we're all in this together, as opposed to governments where it's kind of us and them.
Yeah, no, indeed. Yeah. And I can't remember. Is it a couple £100 perhaps? It's not huge commitment, and I suppose there's a little bit of electricity, but that's it. And just checking that your software's up to date on a monthly basis and that it's working. But it's not technically difficult. And I suppose I've got the Bitcoin way sitting behind me. If there were any problems, they would help me to sort it out. So.
And it's as you say, it adds a level of anonymity. You can purchase. I think you can purchase Bitcoin through your own node, so you don't have to.
Yeah, I do that.
You don't have to go through an exchange or anything.
No, I don't use an exchange. No. Well, I do for my general spending, but for my own personal, what do you call it, a stash? I still don't know all the terms yet. Stack. Thank you. A stack. Yeah. No, that's I keep that separate. Because you obviously can send transactions through the node that way, but it's relatively complex and needs continual practice. So I would say that running my own stack and running my own node, I do feel under a bit of pressure at times to keep practicing and to keep my skills 100% and keep my security tight. So this isn't going to be for everybody. I wanted it to go that way because if I'm going to recommend to my clients and through my company there's about 4,000 clients in total across the two companies, that this is something you should consider as part of your portfolio, that I need to know as much about it as possible, and be as confident with it as possible. Now, particularly at the moment, as a financial advisor, you can't have a Bitcoin ETF as part of the portfolio. Now, I know that may change in the near future. It won't be an ETF per se, but it's going to be something akin to it. And when neither of us, I don't think, quite know how it's going to pan out, but we know it's going to change. But yeah, I've always invested in the same funds as I advise my clients to. I have use the same platforms. I think you have to. I think it's disingenuous for you to have a different portfolio to your clients and to invest your money in a different way. So
I would completely agree with that. And that was actually one of the reasons why I had to end up leaving the regulated advice world for the company that I was working with, because I couldn't even get people into large 80-20 or even 90-10 equity bond portfolios. And these were accumulators, people in their 40s.
Wow.
And I obviously wasn't investing like that myself. I was over-indexing in Bitcoin compared to what most people will. And as you say, it was completely disingenuous. It went against my integrity, my morals. And I had clients ask me, how do you invest? And I'm like, I can't mention Bitcoin to them because, I've had Chris Clark from Advanced Wealth, and he very openly admitted that when his clients ask him, he says, I invest 50% how I recommend you to invest, and I invest 50% in Bitcoin. And then when they ask why, he has 3 books in his offices that he gives out for free. So he has The Price of Tomorrow by Jeff Booth. He has the Bitcoin Standard, and he has Bitcoin for 5-year-olds, which is like a really nice picture book introduction. And so he, when they ask why, he can say, look, go and read the books, do a little bit of research, and then we can talk about Bitcoin. But obviously I couldn't do that working for technically it was my firm, but it wasn't my firm. My email address was the umbrella firm's email address. So it was, working for an umbrella firm like that, I was sat across from people over their kitchen tables and thinking, I'm lying and I can't continue to do this. So you're absolutely correct. So you've mentioned that you're quite new to this. So what, and you, if you don't mind me saying, you had some reservations about coming on here because you didn't believe that you knew enough about Bitcoin to talk confidently about it. You absolutely do.
Well,
but what, what are some of the, excuse me. So what What excites you most about Bitcoin? And then are there any things that you do find intimidating about it, and or that you might find intimidating about it speaking to clients about?
Okay, again, two good questions. The excitement over the past few months is similar to when I first joined the MI group all those years ago, in that I was stimulated intellectually, and my hopes for the future were raised substantially. And I feel similarly with Bitcoin. I feel with John and other people's help, I've kind of discovered something that I do believe in now. You can never be 100% sure about what's around the corner, but from all the research that I've done, and I've done a fair bit of research now, and the people I've spoken to, I'm happy that the kind of the standard objections are just that, objections, and that Bitcoin is here to stay for the better good of the majority of the people on this planet. And actually, the position I had at the moment, or in November last year, which is when I first really started to look into it in detail, I'm making my position at the time, my portfolio, my savings were making shorting Bitcoin, which is the fifth or sixth largest equity, if you want to call it that, in the world. There's the Magnificent Seven. Amazon and Bitcoin are about the same size, and I was completely ignoring it. So at the very least, if I was happy that there may be something in Bitcoin, I needed to be neutral. So I have 1 or 2% of my portfolio in Bitcoin. I couldn't do it through my pension. Well, I can't do it through all my ISA, so I had to buy it myself. I had no choice to do that. So that was, and the more I learn about it, I'm now excited to share my knowledge with other people. But literally, it's only been this week that I've spoken. Actually, last week I spoke to my business partner about it, gently, because it's for him. He's just in the process of buying a house, so overseas, and we were merging. We bought 2 IFA companies. We're merging into the main company. There was lots going on. He had an awful lot on his plate, so I mentioned it very gently, and I will continue to talk to him about it. A couple of his friends do know about Bitcoin, and I think he will come on board at the right time for him. But you need a bit of space, a bit of headspace to get your head around it, and you need I would suggest you need a bit of spare cash as well. It'd be the worst thing in the world to think this is brilliant. I haven't got any money I can put into it, so that'll be a double whammy. Sorry, and what was the other question? That was what excites me about Bitcoin. Yeah.
And is there anything that intimidates you about it in terms of speaking to clients about it, speaking to other advisors?
Yes. Well, in that I haven't done it before. I've certainly not spoken to any clients about it, and I've only spoken to literally 2. But apart from my son, 2 people in any depth about it. And interestingly, one of the guys I spoke to this week, he's a younger chap than me. He's kind of in his 40s, in his prime. He works very hard. He's successful at his job. He's the sales director at MFF. He didn't realise that there was a difference between Bitcoin and the other cryptocurrencies. So it's part of the education process. But what I don't want to do is I don't want to mess it up. I don't want to present to people or talk to them and not do a good job in doing it, because I think that, again, that would be doing them a disservice. So I'm taking it very slowly in terms of talking to other people to gain my confidence and keep reading. So I've read a fair bit. I've listened to quite a few of your podcasts, so thank you for that, and stuff that John sends me on a regular basis. So my confidence is growing, And the only way I know, the only way to do it is to speak to people and to listen to their objections and to handle them and to move on. And the more you do that, the better you become. So, but there's another level to talking to, my son or my friend who's my business partner, to doing it as for the company, because I'm putting other people at risk there. At the moment, I'm just putting my own personal reputation at risk with friends of mine. That I can cope with that. But to do it as part of the structure for the clients that say MFF or at Sanson Lang, I'm not dealing with. I'm dealing with other people's company as well as my own. So I have to be doubly, triply sure that we are doing it in the right way.
So there's a lot that I want to touch on there. You mentioned Bitcoin being comparable to the Mag 7 in terms of market cap. So it's the large assets, single assets, as opposed to, say, grouping the whole of real estate together, right? Mm-hmm. So if you lump real estate, it's by far and away the largest asset, right? It's in the hundreds of trillions. But in terms of single assets, it's gold at about 22 trillion, and then it's Microsoft and Apple, and then it's basically Bitcoin, Amazon, Google, kind of fighting it out for fourth, fifth, and sixth, depending on the price of Bitcoin on that day.
Yes. Yeah.
So you're absolutely correct in that, if you looked at most people's equity portfolios, they probably have somewhere between 1% and 3% in each of the Mag 7 because of their market cap and their influence on indexes.
Yeah.
And Bitcoin for me is something that should be treated exactly like that, right? If you're absolutely correct that with a 0% allocation, you're effectively shorting it.
Yeah, and we are an index company. We do not. Well, we very rarely do actively manage funds, or if they are actively managing some index funds. We are at we're shorting Bitcoin at the moment, which does not make me feel comfortable.
Yeah, well, it's not least because since its launch in 2009, it's been the single best performing asset for over that period. It's the fastest appreciating asset in history. And so a 0% allocation to Bitcoin is effectively saying, I expect a 16-year trend to reverse and for equities and bonds to outperform Bitcoin over the next 10 years. No one knows the future. They may well do that.
Yeah.
But that is a large risk. Right, and so even a 1% to 2% allocation to Bitcoin is essentially a hedge that this may continue to be the fastest appreciating asset in history, the best performing asset over the last decade and a half. So a small allocation to it makes sense.
No, it does. And also, I'm not sure if it's just because I'm getting old, but it feels like at the moment the world is getting madder at a remarkably fast pace. Donald Trump, who is a very intelligent man, because I've heard him say that a number of times, is quite capable of causing chaos. I know at the moment he's very positive. He's helped Bitcoin develop and speed up its progress. But the other things he was doing are completely bonkers. And he's got bonkers people all around him. So my confidence in the US as being the beacon of free market, the economy has waned enormously. And poor Rachel from accounts has got her devil's own job to try to sort out the UK economy. I don't see it. It's struggling. We're struggling. And so things like government debt and bonds, I think the outlook is very bleak for the forces. So part of my Bitcoin journey, I think, is to moderate or to change, not moderate, to change the portfolios that I'm advising my clients to have, and myself as well, that reducing the amount of fixed interest within the portfolio, increasing the amount of equity with the risk that the volatility that comes with that. But I can handle that, I think, with the clients. I've done that for 30 odd years. You need to stop them buying at the peak and stop them selling at the bottom and having difficult conversations. That's why we get paid good money for doing it, for looking after clients' money. And certainly to replace some of that fixed interest component with an element of Bitcoin within the portfolio, and I would be more confident that we're doing a good job for clients. So roll on October the 8th, is it?
October the 8th, indeed.
Is it October the 8th? Yeah.
It is, yeah, absolutely.
Hey team, a very quick pause. If you're a financial advisor, wealth manager, or accountant, chances are your clients have already asked you about Bitcoin. And if they haven't, they soon will. Which is why I've created the Bitcoin IFA webinars. The webinars are designed to give you all of the information you need to confidently talk about Bitcoin with your clients. They're on demand, so you can watch them at a time that's suitable for you. They count as 90-minute structured CPD, and you'll get priority access to the Bitcoin IFA community. Head over to thebitcoinifa.com to book your webinar today. It takes less than 60 seconds. Again, that's thebitcoinifa.com to book. Now, back to the episode. You're absolutely correct. So, look, we have no certainty over the future, which is why, as financial advisors, we diversify, right? We buy everything. We don't just buy the Mag 7. We buy all of the equities. And so, if you truly believe in diversification, then you would allocate into an asset that has been, I'm not going to repeat it, but best performing asset, right? So, and I had Rick Edelman on recently, who was saying, look, one of the arguments you may have against Bitcoin is you don't like it or you don't understand it. Mm-hmm. Okay. How much do you fully understand the fixed interest market? How much do you fully understand, the indexes and all of that stuff? And within those indexes, you 100% already own things that you don't agree with, right? You probably own arms manufacturers, tobacco companies, alcohol companies. Pick the thing that you are against, and within an index of equities, you probably own it. So, it kind of blows those arguments out of the water. I don't like it or I don't understand it. Well, you already own things you don't like or understand. And the drag from bonds from fixed interest over the last decade or two is something I actually touch on in our workshops. So I show the effect of a 1, 5, 10% allocation to Bitcoin over the last 10 years, right? And the effect that it would have on the client's portfolio, the effect it has on firms' revenues. And I show that with both rebalancing and without rebalancing, right? Now, without rebalancing, it goes absolutely bonkers, right? If you'd put 10% into Bitcoin 10 years ago, you've done something like 3,500%. Bitcoin now represents 98% of your portfolio. It's highly volatile, but you're very wealthy, right? So obviously I don't want people to start doing that. But one of the things I do show is just it's a classic 60-40 portfolio. And so with and without rebalancing, even if you just let the 60-40 portfolio run without rebalancing, it's performed 25%, something like that, better than a 60-40 portfolio with rebalancing. So that just shows the drag from those fixed interest bonds over the last 10 years as well. So you're absolutely correct. Just reallocating some of that, a tiny percent, start with 1-2% into, an asset which has historically gone up in value and appreciated very, very quickly. It's something I actually wanted to touch on there. So what, with the 8th of October rapidly approaching, what resources are you utilizing, both yourself and then for MFF, to try and get yourself and your teams up to speed?
I haven't made any plans as such. I think I'm going to have to see what the landscape looks like as we approach. Because we're part of the Quilter network, we have a restricted plus a license, so we can go outside of their main matrix of funds and choose with rationale why we're going to other funds for specific clients. We have that facility, but I don't know what the fund providers are going to allow us to access. I know they're going to be exchange traded notes rather than exchange traded funds, but I've been told they're going to be on the reef. So I think it's too far away. So I haven't engaged on behalf of MFF as yet. So we're going to be more reactive to that as part of our training, as we've talked about. The advisors and their support staff need to understand Bitcoin. So if I didn't understand Bitcoin at all, no less than a year ago, and the head of sales doesn't know that Bitcoin is different to the rest of cryptocurrencies. There's a mountain of education to be done. So you are part of that for us. So thank you for agreeing to come along to speak to our staff. And we got a busy few weeks ahead with various seminars that we do. We get most of our new business through recommendations and seminars, and we've got a full month of seminars in September. So we'll be hopefully be doing that in October, November time. But yes, so it will be educating the staff so that they can explain it to clients, because if I'm nervous about explaining to clients, so will they be. So it's going to be a slow, gradual process, I think. And it's a bit like buying Bitcoin. I certainly didn't go out there and buy thousands of pounds worth. I bought small amounts of Bitcoin over a long period of time. I'm still buying Bitcoin now. I've actually, in the last couple of weeks, I've changed again that I buy a Bitcoin daily. So that's always in the background. Every day I buy some Bitcoin, and I get quite upset actually when Bitcoin goes up in value. So I'm much happier when we've had a bad 2 or 3 weeks. Then I'll buy another couple of thousand or so, because I think when the price goes up, that means I won't be able to get so much, because I'm very confident that in the long run Bitcoin is going to do very well.
That is spoken like a true Bitcoiner. So once you get fully on board with Bitcoin, short term you do want to see the price go down, because you are confident that looking as we as financial advisors want to look decades into the future for our clients, so our clients can enjoy the present. So if we're looking decades out and we feel confident that this asset is going to increase in value, possibly even exponentially, given the amount of money printing that we're going to have to deal with to nominally take care of our debt, then you absolutely want to be buying as much as possible. So you want it when it's on sale. So it's a bit of a mind shift, right? So once you...
Well, it is indeed. And I also want to spend my Bitcoin, because I'm not storing it like a piece of art. It's part of my family's finances. So, and it's difficult to spend Bitcoin easily. So I've now got a bank that allows me to hold Bitcoin, albeit on their platform. Rather than I'm not self-custodying that Bitcoin, but it does give me a card and a dollar account and a couple of other things that allows me to go into the co-op in my local village, and I think I'm buying my £20 worth of shopping with Bitcoin. Well, there's some exchanges going on there. I know that, and I hope that we're not too far away from actually being able to, as more retailers and more people accept Bitcoin, that we truly will be able to not have to do that exchange and be able to buy directly with Bitcoin. I think that's really important, because people, is Bitcoin a store of value, or is it a mechanism of payment? Is it a currency? Well, it's both, and it's not. And I think I want to be part of the community that's spending and using Bitcoin to prove that, and to kind of push out the speculators in many ways, the people that are just in it because they want to make some money, they want to buy it and then sell it in 6 months' time for a profit. Well, they're welcome to do that. No, you can't stop it, but they don't understand it in the same way as perhaps you particularly, Dan, and I'm beginning to understand it.
I would completely agree with that. I think we're in the nascent stages. So it's finding product market fit. People that are into Bitcoin see it as super valuable. So it is increasing in value in fiat terms.
Yeah.
Right? But one of the sayings within the Bitcoin community is 1 Bitcoin equals 1 Bitcoin. So one of the least interesting things to full Bitcoiners and people that want to treat it like a currency, like yourself, one of the least interesting things is the price of Bitcoin in fiat terms. But until I don't think that will change until governments stop seeing it as an asset and reclassify it as a currency. So until we stop having capital gains, for example, right? No one, if you save £20,000 and it went up at 3% interest a year, and 10 years from now it's worth whatever, 24k, you don't have to pay capital gains on that 4k gain because it's currency. So obviously Bitcoin is different. It's treated like an asset. There are obviously ways around that. So bed and breakfasting. So as long as you buy back if you spend £1,000 worth of Bitcoin, as long as you buy back £1,000 or the equivalent in Bitcoin amounts, I think, so obviously the price of Bitcoin can change within 30 days, then you don't have to do that capital gains thing. It's really interesting. I was at a conference in April and I met a chap in his 70s who had completely moved to a Bitcoin standard. So he'd sold everything. He was living, he was doing, hashtag van life. So he was living in a van, traveling around the UK, had his entire net worth in Bitcoin, doing exchanges, doing exactly what you were talking about. So, he would buy something with his card and there was, instantaneous exchange from Bitcoin to pound to pay for it. And so, it really gave me faith that, if there's people in their 70s that are understanding this, then there's nothing holding back the younger generations other than potentially, lack of knowledge around. It's a question for you, actually. So what sort of advice would you give to fellow advisors and accountants who have potentially dismissed Bitcoin through, misunderstanding? So it's common misconceptions, things like the criminality element, it's bad for the environment, it's threatened by quantum computing, etc.
Yeah. Well, that's a longer discussion with them, and you would talk to them and you give them books. The more pressing issue for me is the education. If you take the accountants as an example, thank you very much for referring me on to the Bitcoin accountant, Robin.
Yeah.
Robin was a bit of a star, very generous with his time. So I'm the chairman of an owner of a accountancy practice that's got 2,500 clients and has been around for 50 years. So statistically, out those 2,500 people, you'd think at least 250 have got some Bitcoin, do you think, in the UK?
So there were new stats released by Aviva this week.
Right, yeah.
That it was just under 12 million people, so about 1 in 5 in the UK own crypto. So they didn't distinguish between Bitcoin and crypto. So if you assume 1 in 5, you're looking at possibly even 500.
Fine. Well, I wasn't sure if it's you or Robin that kind of pointed out to me, and this embarrassingly admission that I've been buying Bitcoin since last November. So quite a few transactions, and you quite rightly pointed out to me, which I think I knew, that Bitcoin was subject to CGT, capital gains tax. So like any share, if you're buying shares, you need to know the purchase price, and then you need to know the sale price, and you calculate your capital gains tax. Now, without the purchase price, you're stymied, and you're gonna have to put a very, very, very conservative figure out there and pay more tax because of your stupidity or lack of record keeping. And so literally as of the last week or so, that suddenly that has dropped in my consciousness. So so I've made that mistake and I'm going to have to correct it. And Robin very kindly has pointed me in. So it is correctable. No, it will take a bit of work to be corrected, but I need to correct it for myself. Because I have been in a position where I've sold shares and I can't quite work out what the purchase price was, and that's difficult. And that's not uncommon. As an accountant, you often come across clients who said, I've sold some shares, and you ask them what they bought it for. They had no idea, or they've inherited it from their family. So it's a common issue. It is a common issue. But if we've got 500 clients in our client base that have probably got Bitcoin, and I'm not keeping records, the chances that they're not keeping records is high. So a duty of care to our clients, and we've actually got a talk coming up, making money digital, which I'll incorporate this very much into, is that the record keeping is beyond important, because the severity of a HMRC inquiry into somebody's mental health is enormous. I've seen it many times and it's extremely unpleasant. So even though you can insure yourself against the cost of it, they've become increasingly unpleasant in the past few years. Their tactics for getting taxation out of people, guilt, No, you are depriving people of care in the NHS. They use words like that. When you're totally innocent and you've made a genuine mistake. No, you're not a money launderer. You're just a general member of the public. But they don't sort it out quickly. It often takes a year or two, and you've got this sword of Damocles hanging over your head for a year or two. And normal people like you or me, and my clients, it really upsets them. They can't get on with their life until it's sorted. So good record keeping. So at the moment, the HMRC can come and look at any books they want, apart from the Bitcoin, because I need to bring that up to date. But I don't care what they look at, because I've got nothing at all to hide. But so it's really, really important that our clients, on both sides actually, financial services and accountancy, but more probably pertinent to the accountants, because they are accountants, they're meant to be guiding their clients through taxation, that record keeping part is communicated to clients. So it shows that the learning continues, and that's to me, with my two jobs, that's a huge part of it. And I only found out about it, or only became apparent 2 weeks ago. I've got to get on and sort that out.
Hey team, just a quick pause to say a huge thank you. You've given us your most precious assets, your time and your attention. And honestly, it means the world to us. If you've enjoyed this episode, or you take value from these conversations, it would really mean a lot if you could like, comment, or subscribe. Those things really help the algorithm, and they help the channel to grow. And if there's someone in your life who would take value from this, maybe a fellow advisor or someone just curious about Bitcoin, please send it their way. You never know what it might spark. Okay, back to the studio.
Completely agree on the importance of record keeping. I have extensive Excel files with every purchase and sale. But yeah, you've actually just touched on one of the probably secondary and tertiary orders of the issues of expansive national state debt, which is they're broke, they're struggling to find the money just to pay the interest on the debt.
Yeah.
And so they become increasingly more rude, is probably a polite way of putting it.
Yeah, hostile,
in terms of
hostile. Yeah.
Right, in terms of trying to gather that tax revenue, because there's been, out of control government spending, massive deficits, and now the chickens are coming home to roost, shall we say. And yeah, you're absolutely correct. And then let's touch on, with the 8th of October fast approaching, what sort of things can MFF do, or can other advisors do in terms of feeding back up the chain to, say, their DFMs, their fund providers, their portfolio providers, in terms of wanting to gain Bitcoin exposure for their clients?
Yes, you're right, we should do that. But we are a very small cog in very big wheels. We haven't got a particularly loud voice with, with the vanguard of this world. They're not going to be listening to a small financial advisory practice in London. So I think more, I'm not going to go down that route. I'm going to do it. We'll work out our own way of doing it for our clients, depending on what comes onto the marketplace. So it is compliance driven as well, because we'll have to do it in the way that our compliance team are comfortable with us doing it. But and I suppose I'm glad I went down the self-custody route, because if it's going to be difficult for someone with £1 million in their pension to put 2 or 3 or 4 or 5% into Bitcoin, we haven't got the product yet to do it. The product will come, won't it? Because in the States, the BlackRock ETF is the best selling and the best performing ETF ever. And so it will come to the UK. We're just 3 or 4 years behind them. And so in the meantime, I think my advice to clients will be that they do something along the self-custody route. And although platforms aren't ideal in my mind, I think there's a vulnerability to platforms that they can do that temporarily. There's a vulnerability to banks, isn't there? I've got money at Barclays Bank. I know it's potentially vulnerable, but I'll take that risk for the time being. So as I said earlier, that full self-custody is you have to commit to that. That's time, effort, a bit of money as well to get to that, and it's repeatable because it won't be natural to you. So you're gonna have to keep practicing over that period of time, and because it's self-custody, you've got the responsibility. If you lose those Bitcoin, then you've lost potentially tens of thousands of pounds, and it's your fault. No one's going to bail you out. If your computer goes onto a rubbish tip in Wales, then that's no one's. Well, you're not going to be allowed to go and get it back again.
No one's coming to save you.
No. With a platform, it's a bit easier to do. Well, it's a lot easier to do, and it's visible, but you've got a counterparty risk there. So, but that may be the best thing in the short term, because no solution is a perfect solution. There's always going to be pros and cons to any solution. So I don't see us putting any pressure on anyone. I think we'll see what comes to the market, we'll incorporate it, and we'll advise our clients accordingly.
I think that's a good way of doing things. It's a good strategy. My fear with that short term is, I mean, certainly from my experience of advising clients, I would say less than 5% would have been able to do the self-custody route, right? So the reason they were using a financial advisor a lot of the time is because they wouldn't even know how to open a SIP or an ISA. So then trying to get them to understand exchanges, which are, I'm relatively technically savvy, not amazing, but for my generation, I'm okay. But exchanges are difficult, right? Their UX and their interface is relatively difficult, and then moving Bitcoin from wallets to wallets, it's tricky, right? It takes a lot of attention to detail. So I think the vast majority of clients, we need to meet them where they are, and that is going to be ISA and SIP exposure through a regulated advisor, because it also offers them the protection. I had James Friday on recently. In theory, very shortly, I mean, we're probably almost there already, you've got AI that can essentially advise you on legalities, accountancy, financial advice. But people want to go and work with people because they see that sort of safety net of, well, if you do it and it's wrong, then I have someone to come back to. If I follow ChatGPT's advice and it's wrong, it's on me.
Well, also, it's I'm very confident there's a future for financial advisors and for accountants, because it's like having people pay for pensions reports. Superannuation, which is our niche market, is very complicated, and they go and spend $4,000 with someone else and get a pensions report. And that's all very well. It's got all the details. It's 25, 30, 40 pages long. It costs £4,000. But the key thing with that is, what do you do with it? Brilliant information, but what do I do with it? And that's where the financial advisor or the accountant comes in. So ChatGPT is great, but it won't advise you on the subtlety of what to do. And it's only 99% accurate, and sometimes it misses out something that's really important. Then you're in deep doo-doo. You don't want to be in deep doo-doo with HMRC, and you don't want to lose a big chunk of your investment portfolio through stupidity. So
completely agree. And there's actually, I'm in conversations, and I've met them a couple of times, with a firm that are based out of Canada, who are essentially building the rails for advisors to buy and custody on-chain Bitcoin for their clients. And then they feed that data into your existing platform, right? So if you use, is it Transact or P1 or M&G, Quilter, whatever, you essentially have another interface, which is their interface, where you can go and buy the Bitcoin. So you go and buy one Bitcoin and then you cold store it. But then the data from that pulls into your overall reporting for the client. So you've obviously, in this country, you'd have to do that on an execution only basis. So the client would have to tell you, I want you to buy me a Bitcoin. But then you would be able to report back on it. So those rails that you're saying about, seeing what's coming to market, those rails are starting to get put in place. So I think it's going to be, it's going to be a super interesting year. I mean, maybe even only 6 months. I think things will move quicker than we think. And the other interesting thing is, it's obviously only the retail ban that's getting lifted, right? And it's the retail ban on ETNs.
Yeah.
But DFMs can act as a professional / sophisticated advisor or client on behalf, doing the sort of agency client relationship. So there is, I mean, there are routes to market for this already using, and then, you know, as a professional investor, you can essentially get your hands on whatever you want. So you're not just restricted to ETNs, you can actually have fully functioned ETFs, and there's nothing stopping DFMs or MPS providers building their portfolio now and acting as the professional advisor. So it's interesting that you say that, you know, MFF are quite small in terms of approaching Vanguard, but I think once we get that flywheel going, if enough firms are reaching out to the likes of Vanguard and the other MPS providers, Dimensional, etc., then you know, I think we're in this chicken and egg where there is no demand, therefore they don't produce it, therefore the advisors don't recommend it, and so we need something within that flywheel to change.
No, you're right,
To get it going.
And that's part. You're right. That's part of our responsibility, a part of the community, in fact, to say that, because I don't know if other advisors or other accountants have found the same, but and I don't see as many clients as I used to. But in all the time that I've been advising clients and seeing accountancy clients sometimes, no client has ever asked me about Bitcoin. Not one.
Wow, I think that's rare. Like when now I'm starting to see it more and more, especially in the last couple of weeks, right? So since the FCA have announced it, then I think more clients are asking advisors.
Yes, and I'm sure that that's the case, and I think part of it is because I'm seeing less clients than I used to, and speaking to other people, they have had a couple of clients, no, very softly ask about it, but it's non-regulated, so it kind of goes away at the moment. So, but that's irrelevant in my mind, because if I go to the premise that I want my clients to have the same investment experience as me, if I'm investing in Bitcoin, the very least that I need to do is to share that with them, because otherwise I'm not investing the same way as they are, and that's unfair, and I think that's unethical. They don't have to follow me in this particular path, and if they don't, in some ways that takes a bit of pressure off me, because you never know. We might both be wrong, Dan, who knows? But it's
well, that's, I mean, it comes back to no one can predict the future, which is why we diversify, right?
Yeah, indeed. Yeah.
Mark, I'm looking at the time. I'm wary of that for both of us. So the final question we always ask is, we'll have to do this again, by the way. I think we could talk about this for ages. The final question we always ask, what is one positive thing that Bitcoin has brought to your life outside of number go up?
Oh, that's an easy one to answer. It's just excitement and rejuvenation, and feeling that you're at the very vanguard of something that's changing, that's for the good, and is a bit of a secret that people need to get their heads around. So it's the excitement, it's being at the vanguard of change, and learning about something new, and the repercussions down to the rest of my knowledge. So over the last year, my confidence in fixed interest type investments has changed. I think I understand it better now, and the risks involved with that. It's not the safe haven it purports to be. So that, I feel, has turned me into a better and more knowledgeable advisor, which I intend to pass that down to clients and the people that work with me.
That's amazing. Thank you, Mark.
Thanks, Dan. Good to speak to you.
You too. Have a great day.
Thank you.